Ladies and gentlemen, welcome back to the channel. Markets are moving higher. The RSP is breaking out of almost a 2-month high, which is definitely a great sign. You have small caps outperforming based on some of the data that we got today with GDP. It's now the middle of earnings season. You have Apple earnings today and after hours. I will go over that. You have big data coming tomorrow morning that will be critically important. And honestly, stock market could explode tomorrow if that data comes in good, which surprisingly, a lot of banks actually expect the number will come in below, current market expectations, which could just mean stocks are going higher tomorrow. And I will discuss that here throughout this video, as well as many other things that you also need to know. Hit the like button as well as subscribe to the channel if you have not done so already, and let's get started. Now here on the day today, the Dow is up 0.22%, S&P is up 0.16%, NASDAQ down 0.2%. The outperformer today by a long shot is the Russell 2000, up 1.1%, following weaker than expected GDP results. GDP grew at 2.3% pace in the fourth quarter, less than expected. Economists were expecting 2.5% growth. So this came in lower than expected. And why is that good for the Russell? Well, it maybe gives the Fed a reason or an excuse to cut rates. Now, in other economic news, the Labor Department reported initial jobless claims for last week at 207,000. That's a sharp decline of 16,000 from the prior period and well below the forecast of 228,000. So you had good initial jobless claims numbers, worse than expected GDP numbers. So you would think, kind of cancels each other out. And after all, GDP is still running at 2.3%. That is really good. Bond yields today are down about 2.5 basis points in sympathy of that, down to 4.53%. If 10-year treasury yields do continue to fall, well, that is going to be good for small caps. And you actually have a lot of the markets that are pretty green today. There's some areas of weakness. Some software like AI names some are doing well, some are on the weaker side. Microsoft really made things weird with some of the cloud names. Okay, so a lot of mixed bags out there. Okay, but generally speaking, markets are doing okay. Oil, $72.80 per barrel, up 0.25% today, but you're down a lot since inauguration when you were at $80 a barrel. So you've fallen like almost 10% with oil, and this is overall a positive for the economy, overall a positive for inflation prospects. Now, today and after hours, we will get earnings from Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Decker Brands, United States Steel, and SkyWest. And then tomorrow morning, we will get ExxonMobil, Chevron, AbbVie, Phillips 66, and Charter. So Apple earnings will be important, and I will give you the breakdown of their earnings in the video coming out later on tonight at 8 p.m. Eastern Standard Time. We also had pending home sales month over month and year over year. Month over month, pending home sales dropped 5.5%. We were actually expecting a 0% change with pending home sales. So home sales actually plummeted versus expectations. And pending home sales year over year came in at -5%. Expectation was actually for +4%. And last month was +6.9%. So big change year over year and month over month. That is likely feeding into the slight drop in 10-year treasury yields today, which is, again, positive for small caps and interest rate sensitive areas of our markets. Now, tomorrow morning, we are going to get Core PCE month over month, expecting this to come in at 0.2%. But remember, it's not just a even 0.2%. It actually comes out at a decimal point, in which I will show you the estimates from major banks in just a moment. Some of those estimates are really good. And let me tell you, if some of those estimates are true and accurate, and that's the number we get, markets are going to rip higher. They're going to soar higher tomorrow morning. So I'll share that with you in just a moment. We also have personal income month over month expected at 0.4%. Last month's reading was 0.3%. That one's interesting because for a long time, investors wanted to see incomes rise to kind of try to keep pace with some of the inflation. That's good for the economy, considering 70% of the economy is consumers spending money. But at this point, 0.4% on a month-over-month basis is unsustainable with the Fed's 2% inflation target. That is, on a 12-month annualized basis, about 4.8% wage growth, which is, I don't think there's a calculation you can make that make sense to justify a Fed 2% inflation target. That's almost triple the Fed's 2% target. So that would be an issue potentially if it comes in on the high side tomorrow. Now, personal spending month over month is expected at positive 0.5%. Again, I think that's good. You want to see spending come in good. You don't want to see spending start to decline. Again, 70% of the economy or GDP is people spending money. And specifically what we've seen today with the GDP numbers that came in weaker than expected, I think the last thing you want to see is spending come in really bad. Then you're going to start questioning, how strong is this economy? Okay, that would be good for Fed rate cuts, but maybe not as good for the broader markets. Tomorrow morning, you will also get Chicago PMIs, last month at 36.9, expecting a number of 40. Okay, so that would be quite an improvement. And then Fed Bowman speaks at 8:30 in the morning as well tomorrow. I think we all want to see what specific Fed members say, because nobody descended yesterday. The Fed didn't provide a whole lot of clarity in their path ahead. They really just stuck with their data dependent thing. They don't know what's going to happen to tariffs. They will react when they have a reason to, but for now they're on hold. So not much actually changed. If Fed Bowman and other Fed officials, especially coming next week, kind of sound more hawkish, that's not going to be good. If they sound more dovish, obviously that's good. And perhaps PCE tomorrow morning is going to really, change sentiment from some of the Fed officials. We'll see, especially if some of these lower estimates are correct. So again, when you see the headlines in the morning, like 0.2% or 0.1%, you really have to look at what the number is. Now, I'll tell you right now, if you see 0.1%, that's good. But if you see 0.2% pop up on CNBC or wherever you get your data from, it could be good or it could be bad. Let me show you an example of this. If you come in line with the median forecast of 0.18%, you would get rounded up to 0.2%. But if we take a look at like a low 0.2, so the headline could still read 0.2, but you could actually come in at 0.15, 0.15. It would get rounded up to 0.2. But times that by 12 for an annualized run rate of 1.8%. Okay, you could also come in at 0.2%, but the decimal number is 0.24. Times that by 12, you're looking at a run rate of 2.88% PCE. There's a big difference. There's a 1% difference in just the small, change in the decimal point, right, over a 12-month basis. So not all 0.2s are created equal, and that's what I'll say there. Some low estimates on Wall Street, there's actually a bunch of them. Oxford Economics is the lowest at 0.12%. Keep in mind, last month for PCE, Core PCE month over month, you were at 0.11%. So that would be a slight uptick, but that would be really good. I think markets would rally aggressively on that. Piper Sandler's at 0.13%. That would be a very good number as well. Capital Economics, 0.14%. PNB Paribas is 0.15%. Bank of America is 0.14%. So there's actually quite a few firms that expect the number will come in on the lower side tomorrow, including Jefferies at 0.15%, right? Morgan Stanley even 0.16%. All of these are lower than the market's current consensus. So I do think there's good chances that tomorrow morning's PCE is actually going to be good. It's actually going to come in good and be a positive for stocks. Now, obviously, if we come in on the high side, that's not going to be as good. Employ America's at 0.21%, TD Securities at 0.20%, Wells Fargo 0.21%, and Namura Bank at 0.21%. So some high estimates, but it does seem like things are kind of skewed to the low side, that people think the number could come in lower versus higher. Now, today in after hours, you do have earnings from Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Decker Brands, United States Steel, and SkyWest. Tomorrow morning, you have Chevron, Exxon, AbbVie, Colgate, Phillips 66, and Charter. This morning, you had MasterCard and UPS. UPS was one of the bigger losers. The stock is now, hitting new multi-year lows on news that Amazon is slowing down their contract with USPS. Maybe they don't need as much carrier help, right? I guess that's the idea, and that is hurting UPS. But anytime you see UPS, FedEx, any of those shipping companies fall, they're seen as bellwethers for the economy, and that's normally not a super great sign. Now, Apple's also going to be interesting because when you look at the day today, Microsoft is down 6%, and I think people like Microsoft more than they like Apple right now. At least Apple or Microsoft is growing a lot more than Apple, right? Their cloud division is on fire, even though it missed estimates marginally and the stock got punished. Azure continues to do well. Apple really hasn't grown in years, okay? So are investors going to like Apple? That's really hard to say, and we will find out momentarily. Now, good news is for markets today, we are breaking out to a relative high on the RSP, a level we have not been at since at least December 11th. So almost 2 months now, we have not been this high on the RSP. The RSP is the equal weight S&P. So there is signs of life coming into our markets. And in fact, even though like the NASDAQ on last account was slightly in the red today, you actually have about 80% of stocks, broadly speaking, in the green, with a big outperformance of the Russell. Russell 2000 is up 1.33% today. The Dow is up 0.61%, S&P up 0.5%, and the Dow is up 0.1%, kind of break even. Again, the VIX is down about 7%. Bond yields now down almost 3 basis points on the day today to 4.526%. And I do think tomorrow morning it's going to be the make it or break it moment for bond yields. If PCE comes in on the low side, we could break below 4.5%. A break below 4.5% would likely trigger some buying of the algorithms, some buying of small caps, and you could have a more risk on market again, which I think a lot of our portfolios would like that. With that being said, the increase in breadth today, you can see this in the CNN Fear and Greed Index. You're now at neutral for market breadth. Okay, the headline number is at 48, which is also neutral. Yesterday, you were at 45, so a little bit of a recovery on the CNN Fear and Greed Index today. Market momentum is fear, stock price strength, extreme fear. Again, stock price breadth is neutral, put and call options greed, market volatility is neutral, safe haven demand is greed, and junk bond demand also in greed. Now, things are not great out there, though. I will mind you, the percent of stocks trading above their 50-day moving average is at 52.32%. Basically half of stocks are trading above their 50-day moving average and half are trading below. That's not particularly a super fantastic number. Okay, could be a lot better. And I think that just means there's a lot more upside potential in this market at this point. You could get back to that 80% level. That's when you're overdone. That's when you're pretty vulnerable for corrections. And we still could see 30% of our markets break above their 50-day moving average before that happens. So I do think there is a long runway of potential upside here for our markets before you should be concerned about frothiness or, generalized overstretched markets. Sure, is there areas of markets being overstretched? Sure, but as kind of a lump sum here, we're not even close to being overbought. Now, 3 weeks ago, the AI Investor Sentiment Survey absolutely plummeted to multi-year lows at 25.4%. So 25.4% of investors were neutral or were bullish. The week after of January 22nd, that jumped to 43.4%. And last week, you jumped to 41.0%. Okay, neutral investors fell last week from 27.1% to 25.0%, and bearish investors climbed from 29.4% to 34.0%. So you did get more bearish in the last week. neutral investors fell and bullish investors also fell. So there's not a lot of people right now that are neutral. I think a lot of people have picked their side here. They're either bullish or they are bearish. And I do think tomorrow could cause a big reaction in markets, partly because of that. Now, ladies and gentlemen, let me know what you think about this information down below in the comment section. Besides that, there was not too much news today. Obviously, there was the crash over Ronald Reagan Airport. That is a tragic situation. No bueno. For anyone involved, really makes you not want to fly. Okay, if something that should have been totally unavoidable actually happens, not great. But is it affecting the markets today? No. Okay, you have a lot of Senate hearings today with RFK and some others. That's not really moving markets either. Trump hasn't really said anything, too crazy today. Not really getting any headlines from that. So it is kind of a slow day as far as news, but definitely work is cut out for us here today in after hours and tomorrow morning with earnings and the economic data. So let me know what you think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.